Welcome to another Surefy webinar. We're so glad to have you. My name is Ben Brantley, and I am tickled pink to be your moderator this morning. We have a scintillating topic, at least I think so, enlivening the frozen book of business. And we're extremely pleased to be able to have a panel of industry veterans, maybe even they call themselves experts, I'm not sure, to talk and debate a little bit about this topic. I'm going to introduce it in more detail in a minute, but first, I'd like for you all to get to know our panel. So I would ask them to introduce themselves. Maybe we could start with you, Anne. Tell us who you are and a little bit about yourself.
Sure, Ben, glad to do that. I lead technology for Couvert. We are a growing life annuity platform. Um, we have a family of insurance carriers that carry life and annuity products. I'm speaking to you today from Guarantee Income Life. That is our Baton Rouge, Louisiana company. We also have United Life in Cedar Rapids, Iowa. Glad to see someone from Iowa there on the call, Chad. And we also have offices, Lincoln Benefit Life, with offices in Illinois and Nebraska. Since we're talking a bit today about frozen books of business, I can also share that Guarantee Income Life and United Life both focus on new sales, and Lincoln Benefit is an exclusively closed book of business at this time. So good to think about these perspectives. Thank you.
Great to have you. How about you, John Ketty?
Yes, good afternoon. I'm John Ketty. I'm CIO, CTO, and CISO here at Security Benefit Life. We focus on the annuity business and retirement services. So in my past, I have quite a bit of life experience also, so looking forward to the discussion.
Welcome. Last but not least, Mr. Hirsch.
Hi, everybody. A lot of familiar names in the audience. Chad Hirsch here. I am currently at AWS, Amazon Web Services, where I'm leading our business and market development for life, annuity, group, and pensions globally. But I come from a long history in the life space. I've been at one of the leading software providers. I've been at one of the leading SIs. I've been at two of the leading analyst firms, and I've been an e-business director at a carrier. So I'll try to bring a whole bunch of different perspectives in around this closed block frozen book idea.
Great. Thank you all for joining us. I mentioned I'm CTO at Surefy. I am the rookie to the life and annuity business. I come from P&C. I was CTO at Guidewire, core systems there, claim policy billing, and then later digital platforms. Super excited to be in a new industry and learning lots about it. And also very glad to be your moderator this morning. This topic, enlivening the frozen book of business, we chose those words carefully. We really do want to talk about closed blocks and some of the challenges, but also maybe some of the opportunity around those, and spend some time with this group trying to gain perspective on that. How should we think about those? What maybe were some of the mistakes of the past? What will be some of the opportunity and frankly obstacles in the future to dealing with these, to taking advantage of them, or maybe not? And so we're going to explore that this morning or this afternoon or wherever you are. I would encourage all of you on the chat to not be shy. This is supposed to be interactive, and so we can see everything you type. So throw questions out there, and I'll kind of weave them into the conversation as opportunity presents. Do not be shy. Please ask questions. We would love to have those. So without further ado, I've proposed that we start in the past, looking at those blocks that we might have, whether they're closed or whether they're just hard to get to for whatever reason, marketing, economic, technically. And I'm going to throw it to Mr. Ketty first to kind of lead off in that topic. Tell us a little bit about your perspective on this.
Yeah, I'd be glad to. And quick point of order, how's my audio coming through, Ben?
Loud and clear.
Oh, good. So I won't start screaming because everyone wonder why is he so angry about this. So a couple of quick perspectives. I think for consideration, like Ben said, we really want this to be very interactive. I'll throw out two forces from my experience. One, I'll start with a question. Was there an ice age or did human activity cause this? And I would suggest there was some human activity that caused things to be closed block, legacy block, frozen block. So in my past, I've worked for a couple of very large serial acquirers. And I said serial acquirers. They're not serial integrators. Those are different things. And part of the acquisition strategy of the past was a lust for scale. And I guess if you're going to have lust for insurance scale isn't the worst of all things to have. But there are some implications. There are some things that happen with those desires, and some of those things may be unintended. So, in the past, I've been part of organizations that go out and slam together, or really don't slam together, multiple legal entities, many admin systems, many different lines of business. And then they have this huge multi-billion-dollar asset they need to amortize. So, thoughts and actions begin to go to how do we bring down costs? And so then what we've seen is, well, we set up big anonymous impersonal call centers. Maybe we do some BPO around the edges. Maybe we do very aggressive BPO. And I want to be very clear here. I don't want to come across saying every call center and every BPO arrangement failed. That's not fair and it's not accurate. However, if we were to say every big call center and every BPO delivered a wonderful consumer centric experience, we would say, well, that didn't quite work right or consistently also. And so now we have these big, monoliths being developed. We have companies viewing for in terms of consumers, we need to drive down cost and we start to deliver experiences. And so if you're a consumer and now you have to go through an IVR that takes 37 steps until you get your account value and you've lost your will to live at step 12. And then we say, well, now we'd like to cross sell or upsell. It doesn't always work very well. So I would say one thing is human activity and behavior may have caused blocks to freeze up or to behave closed because the consumers felt like I'm just a cost to be reduced. No, I really don't want to engage with you more. Force number two is more of a declaration or intent by insurers. So I work for insurers where we would declare this block is going to be frozen. We're not going to invest more in that. Or this is a legacy block. And that's certainly fine and it's very understandable. But if you make declarations independent of data, again, bad things can happen. So if we say, well, we have this block of whole life, and that's frozen, we're not going to invest more in here. But we have this brand new shiny UL block. That's our future. Well, what if the whole life block, in my hypothetical, is profitable? And what if it has a consumer demographic you really could cross sell and upsell to if you understood their needs? And maybe the shiny new UL block, it'll be 6, 7, 8, 9 years before profitability will emerge. And you'll understand, are we attracting a demographic? So it's sort of like I would like to declare to all of you right now, I'm 7 feet tall. But if I try to play in the NBA tonight, I'm going to have really bad experiences because the declaration and intent was independent of facts and data. So those are two forces that I think led us here. And I would say the learnings from these two forces is one, we, in going forward, need to really think rigorously about our consumer base. What can we do to meet their needs? How do we meet her need? How do we meet his need? How do we view them not as just lumps where costs be minimized? And secondly, make decisions that are data and economics driven. So that's my perspective. And then, real quick in closing, I don't think that's just my perspective. If you look at innovators, entrepreneurs, VC, where are they investing? Consumer engagement, data and analytics. I'm unaware that someone out there may have an example of any innovator investing in how do we have a more complicated calls, IVR? How do we frustrate people more? So those are kind of two forces that I think got us here, Ben. I don't know what others think of that.
I agree
Uh,
with a lot. Go ahead.
No, I was just going to say, I was going to send it right to you. And I see you, I see your head moving, and I want to hear your thoughts. I will note, John, you may actually be 7 feet tall. We can't tell because of this format. But Anne, how do you feel about? How do you respond to that?
Well, I agree with a lot of what John said. When I think about this, I think about customers and products, and I think about data and systems. And John, you spoke to all of those things, right? So when you think about systems as they've been designed, especially around closed blocks, right? Maybe around older systems, maybe with BPOs or third-party administrators, right? Those systems, those operational activities that support a closed block may not work as well when you try to thaw things out, right? And I think it is important, when you look at what am I going to do with the book of business we have, it's important to look at the quality of your closed block, as you were saying, and you have to be able to get to the data. So a focus on data and analytics is really critical. The decision makers, the stakeholders in our organization have to be able to see that information so they can gain insights. It's out of sight, out of mind until they have visibility on those things, right? Um, and right now, it's really likely the companies don't know, other than, of course, actuarial projections that we're used to watching. We may not know those stories around the information that we have right now. Who are those clients? Who are those policyholders? What's their appetite for new policies, right? By the way, are they still in contact with that agent that sold them this policy way back when? And what do they think of that person, right? What fiduciary activities is the agent doing annually to keep in touch with them? And do we know the story around that and how we can benefit from that? So that kind of analysis can be challenging, right? We're used to focusing on the new business, not necessarily the closed block. So getting in that conversation and prioritizing it can be a challenge. And I do think that's what we've done in the past.
Definitely a bit of the human condition, right? To be excited and focused on the new and shiny, and sort of naturally pre-indisposed to digging through stuff that we might perceive as being old or crusty, or we don't know. It also seems like both of you are kind of hinting at perhaps a bit of institutional knowledge attrition, right? Some sense of that market and how those contracts came to be and what the motivation was behind those. I'm curious about your take on this, Chad, as an opener from the perspective, from both of these perspectives, from these carrier folks, as a technologist. How do you see this kind of as we look back and maybe have perfect hindsight in some sense?
Yeah, well, it's funny because looking back, I mean, I remember my first, God, I think it was my first week as an analyst. This is going way back in time a bit. I met a CIO at a life carrier, and my experience at that point had been with my own, the carrier I was at, and it had its own closed block issues, but we had three legacy platforms, right? And this guy, I said, oh, how's your situation? Are you any better than us? He said, what's your situation? And I told him, we have 3 legacy platforms, and I couldn't tell whether he was going to laugh or cry. And I think it was maybe a little of both. And he said, well, we've got 17 legacy platforms. I said, yeah, but you're like half the size of us. He said, yeah, but we acquire a lot of companies. I said, right, but wouldn't it make sense to consolidate those? No, that's really hard and really expensive. And, that guy would later become a client of mine, both at Majesco, at Capgemini, and is now retired finally, and looks younger than he did when I met him. But the reality was it's hard to take closed blocks and do something with them to make them less difficult to manage, right? Historically. And I think a lot of what we're excited about talking about today is how that's changed. But as you look back, you can look at the UK model, and they outsourced the daylights out of closed blocks. And the lesson that was learned there, in my view, is that nobody cares about your customers other than you. And so, the experience for customers was okay. But for example, if you call about a policy that was not closed, not part of a closed block, and you asked about, oh, hey, I've got one more question. It's about this policy. The answer is often, oh, I can't see that policy. And that's a terrible experience for the customer. So a lot of things had to happen over the last 20, 25 years to make it plausible to do something different going forward. So looking back is very instructive, in large part what not to do, but in part to see what lessons we can take going forward of the things that did work, because some things actually worked. They just weren't maybe cost efficient or cost effective, or they prevented us from doing some of the things we wanted to do. So I do think there's some instructive things that we can look at in the past and say that didn't work, or we could do this better going forward. But I think a lot of things have also changed just in the last 5 years or so that allow us to start thinking differently, and that's what I hope we'll get to talk about.
Okay, give us an example of one of those things that
Yeah, if the others are okay with me kicking off, I'll talk about CRM, Salesforce, a single view of the customer, combined with data lakes where you can get to all of the data about all of the customers, right? So whether or not they're in a single policy admin system, whether they're spread across you and a BPO provider, being able to get to all that data and analyze that data and have access to that data during customer service discussions, for example. Another big change is the ability to integrate to some of those legacy platforms so that you're not just, training people up on a green screen in a call center and throwing a portal in front of it and hoping that they can find the policies across 10 different admin systems, or 17 in the case of this, that poor guy I mentioned. So I think, those types of things have changed. I'll kick it back to the others to talk about some of the other things that they've seen as well.
Well, I think the technologies you mentioned are very important, and I think you're right. That's opportunity going forward. So we have been able to leverage some data lake. Totally agree with you. That's an opportunity. Like everything, you want to be careful not to drown in the data lake if it's not constructed properly, because that can just bring more headaches and so on. But that's an opportunity. CRM is really interesting because I think everybody has a CRM, but the way they use it, they're not getting really a view of the customer. And I do think that, from my perspective, companies are realizing this and trying to really go to Salesforce 2.0 or something. I don't mean as a product name, but realizing how do we really get an understanding of the consumer, of the customer. So I agree with you. I think those are positive. And I'd also agree, a lot of the API and a lot of the work that's being done now, I do think is a step forward. But I do think a lot of it has to be a mindset, a cultural change also. We have to say, we really care about the consumer, and we really care about the customer, and we really want to meet their needs, and come to an understanding of what's needed in their life. And then, like I said, how to engage them. So if we do all this technology that Chad and I have been talking about, we make all these advances, and we go and approach somebody in 2022 with a fax machine and a 1990 approach, then it all breaks apart once again. So, like I said, I think some of it's mindset, but I'm very optimistic about what the technologies can do.
And I agree with that. It's important to stay in touch with the customer. And in our case, the sales team is often very close to customers and what they need. What I try to keep in mind when aligning with the rest of the business, right, is keep your friends close, keep the sales team closer, and that kind of helps us stay aligned with each other. So from that perspective, the consumer experience has just changed so much in recent years, right? Advisors, policyholders, they expect real-time information on their applications, right? Detailed policy information. They're not comparing us so much to each other as insurers. They're comparing us to Amazon, Uber, other retail services. Why isn't it all easy? Why can't I see the tracking of my policy come in my book of business the same way I can see my food order right on my phone? So those things, right, are on the edge. They're on the front end of policies and on the back office systems, as you mentioned. 17 systems is a lot, Chad, right? And changing out those older systems is really hard and it's really expensive. I mean, I've walked into companies where folks have experienced a conversion, and first thing they said to me is, well, if we do another conversion, I'm going to retire today. So we want to avoid those things, when we can, and take the pain out of the customer experience as well. And I think what we're finding in a lot of cases is that, as you were mentioning, John and Chad. Integration is really important. Seamless integration to the person having the experience, and getting better and better at delivering on connecting the dots internally, so that we can give our internal customers a good view of everything, and our external customers an experience they don't have to think too hard about.
Yeah, I think that's so right, Ian. And when I made my comments about consumer, I think you correctly got the right scope, focusing not on consumer the way insurance companies do, but what about Robinhood? What about Amazon? What about all these other companies? And for years we've talked about it, but I think it's the reality now. The consumers expect that, or they just won't deal with us. And I think that's a very scary thing going forward, maybe even scarier than the frozen blocks of the past.
Well, and you guys raise a really critical point, which is this notion of consumer consumer experience. Let's face it, up until 5 years ago, life insurers did everything possible to avoid dealing with consumers, right? The agent was the face of the carrier to the consumer. And so, we have so little experience as an industry of how to raise the bar on that consumer experience. And, I think it was Dustin and somebody else from Surefire that did a webinar not too long ago called the Amazonification of life insurance. And I laughed when I saw that, because if you're really talking about Amazonifying, it's a new verb for me, life insurance, you're not talking about, making it available on, a storefront at Amazon. What you're really talking about is dramatically improving the customer experience, relentlessly beating down prices, having an entire experience that's designed around what's best for the consumer, right? And we haven't done that as an industry, because we've always said we don't want to get in the way of the relationship the agent has with the customer. Now, as Ethos and Ladder and others have brought a much more consumer-friendly experience to the process, everybody's gone and said, okay, let's rethink this. So I think going forward, when we think about closed blocks, we have to think about, what impact does this have on my brand? Because historically, we've always said customers don't really care about the brand. Some brands feel differently, don't get me wrong, but by and large, as long as your insurer is well rated, most people don't really care who their insurer is. And so this notion of hurting the brand didn't really matter, especially when you have often 3, 4, 5 brands underneath your brand. I mean, this isn't directed towards you, Ann. This is, where I came from had the same issue, right? And so we have to think about, how does the consumer view us? Are they going to come back to us for more products in the future? Do we even know how to cross sell to them? Do we know how to upsell to them? And so we have this treasure trove of data in our closed blocks, and very few carriers have thought about analyzing that data and using that to figure out who's a good customer for me to go after. When you think about the most expensive thing in life insurance is customer acquisition, right? Either in the form of commission or in the form of marketing. And so why not use the relationship you have with your existing customers, or the relationship you could have, I guess, with your existing customers, and may have had for 10, 15, 50 years. And you know enough about them to know what they might be interested in. They bought this policy when they were 20. They're now probably thinking about retirement. Maybe I should be selling them a single premium annuity. Maybe, there's all kinds of things we could do with that treasure trove of data.
No, I agree. I often say, we in traditional companies, we hate consumers. And people yell at me and scream at me and say, don't say things like that in public. I'm like, go call the insurance company. Go look at your statement. Does that look like a really consumer-centric, consumer-driven experience? I mean, it's pretty easy to test that hypothesis. I also agree with you, Chad, that, in addition to the data we have, increasingly, due to some of the past technology we talked about, you can augment that data with other data and get insights. But I think a lot of it does come down to really changing our mindset. And I'm not down on agents or against agents, but we have to realize the consumers are really important and our intermediaries are really important. And we have to create value to both. Or like I said, on a look ahead, I think it gets pretty dark for our industry.
Yep, I agree. Go ahead.
Is it would it be true to propose that a carrier could have its cake and eat it too? Um, Maybe in the sense that we all acknowledge that the retail experience has the expectation has been raised, and in order to create a coherent modern experience for those retail customers, and frankly for that distribution channel, we need to surface all of the books of business, regardless of their how cold they are, how frozen, or how technically trapped they might be in some of those 17 back ends. And that's a heavy lift. But if a carrier were willing to make that investment, wouldn't it also probably be true at that point that they would be better equipped to do some of those analytics and some of that harvesting and maybe some of that enlivening, not just for the sake of bringing it to the table on the web and on mobile, but also the fact that we've gone in and plowed up that data and freshened it. Does that open up a new opportunity kind of in both dimensions? I don't know how you feel about that.
I think it would, Ben. I think as you shift to more of a consumer focus, it helps, right? The better we get at keeping our data visible, systems flexible, the better off we'll be. But why haven't we done that already, right? I think about two things there: visibility and motivation. If you can't see it, it's easy not to think about it, right? Out of sight, out of mind. So you're right. As we bring in more visibility to our closed block of business in the same way that we have with maybe our current sales pipelines and the products we're selling now, we're able to liven it up more easily and make decisions about that closed block the same way we would on an open book of business, right? If decision makers aren't seeing that closed book of business, they forget about it. If they're not seeing the challenges on the back office side of things, they can't effectively move forward, right? So that's visibility. And then motivation. It's easy to focus on new sales. It's easy to look at the shiny new things, right? It's what we're used to doing. And it's also what most of our compensation and reward structures are built around. It's really important to think about how we're individually motivated, how we're motivated as a company, how our vendors and partners are motivated. What are we measuring? What are we rewarding? Does it support the growth of what we already have, right? The toys we already have in the toy box, the consumers we already have in our portfolio, or does it really drive us towards the new things, the new products, the new consumers? And I'd argue that we need to really consider that our motivation, making things visible, and considering our motivation and how that moves us forward with both types of business.
Well, I think we also have more choices now, Ann, because if you think about it, there's now some machine learning tools that can help with conversion. Helps de-risk it a bit, helps drive down the cost a bit. So maybe conversion has become more plausible than it was in the past. You could also look at it and say something like Surify is a great example of how you could literally that's wrong choice of words. How you can figuratively enliven a closed block simply by giving visibility into that book of business, right? You dump all the information into a lake so that all of it's available to a tool like Surify, and you have that front end visibility for your CSRs, for your agents, for your retention team, for your for lapse monitoring. So you can do more now than you used to be able to do at a reasonable cost. To do that previously, you'd have to wrap everything with APIs. You'd have to time your batch cycles. You'd have to, there's all kinds of stuff you'd have to do that you don't need to do anymore. So I think that we have more choices today. And I think what we can do with those choices is to really, per what you described as the compensation and other incentives, we need to rethink, what are we trying to do with our closed blocks? Is it really just to run out the clock on them and, hope that they're profitable or just know that they're profitable and sell them off if they're not? I would argue no. You can do targeted retention. You can do, target upsell and try and make those closed blocks profitable. And a bare minimum, simply making the data accessible makes them more valuable to a potential buyer, even if you do get rid of them. So I think there's lots more choices now than we used to have.
Yeah, I agree with all that. In addition to just working with different startups and innovators, right? It's not like, and I think we in corporate companies, probably not just insurance, probably any corporation, we think, oh my God, we got to go build this huge, massive thing for everybody, Well, back to, I think Chad made the earlier point. Maybe we know the demographic of the life insurance. Now they have retirement concerns or aging concerns. Can we bring services to them via a startup without a huge investment? And that starts saying, well, wow, this company does care about me, not me as a policyholder. They care about me. And then I think you can have more helpful conversations about really then how do we upsell and cross sell, because we crossed that chasm. You're not just a policy number and we're trying to reduce the amount of money we spend on you, but trying to really meet the consumer and say, look, we understand where you are in life. We'd like to add some value. We'd like to engage in a helpful conversation with you. You know, that'd be the most optimistic view I would have going forward.
I'm fascinated by. Oh, go ahead, Ed.
I was just going to say, I agree. In the past 3 decades, if you've tried to build companies that have tried to build monolithic or gargantuan systems that handle policy administration and all the things above and beyond, up and down the ecosystem, you know, you're obsolete as soon as you come to market. So it seems to be a much better track to plug in insurtech opportunities and new capabilities in a good way with your ecosystem, right? From various places, and we're starting to see that come in from other areas in the insurance market and from other retail spaces as well. I don't guess anyone would say that life and annuity insurers have been on the bleeding edge of technology and leading things in the U.S. on this, right? But we're catching up.
But Ann, you bring up a really, really good point, which is that it's not something that's easy to do today. And even as you plan for that down the road, you know, even if you buy a new platform today, there's no chance you're going to be done implementing that thing in the next 4 years. I'm going to say at a low end if you're doing conversion, right? So instead, you know, you plan for that as your long term. You do what you need to do. But while you're going through that conversion process, you can put something in front of it. And, you know, I used the example of Surefire earlier because, hey, you know, we're on with Ben. But, you know, a tool like Surefire lets you front end, you know, what that construction work that's happening behind the scenes, right? So while you're doing that conversion, you want the customer to have the new customer experience today and then have that experience not change as you change the back end systems over time. So even if you're doing a core system replacement, there's still an argument to be made to do that enlivening work today. You get the benefits accelerated, you know, let's say half or more of the benefits, and you start moving down the road towards that goal you have. So, you know, it just seems like that's the enlivening part's the no-brainer.
Yeah, I would completely agree. I think it's required, Chad. I think you have to get, we have to get more focused on the consumer today and what does he or she need and how do we meet those needs. And you're right, if any corporation thinks, well, we agree with that, but we got to wait 6 years while we do a bunch of internal stuff and then we'll emerge. You may emerge to a very different world and it may be unreceptive to your reemergence.
Yep. Nope. Ben, I think you're on mute.
Thank you. I am fascinated by time to value on this type of initiative. We've talked about the front end, the consumer experience, but maybe it starts down in the data, down in the dirt, to use the farm or the geology metaphor that we've kind of started off with. I'm imagining going in and kind of tilling up this soil a little bit and maybe extracting some of that information. Maybe it goes into a lake. That kind of fits the thawing metaphor too, now that I think about it. But is it realistic to allocate some time, energy, and capital to some kind of initiative like this against one of those blocks or a group of those blocks? And what is a realistic time frame, in your opinions, for when you might start to see some value and be able to validate that, yes, this is actually worth doing and we should proceed?
I think it's weeks and months, not years. I mean, if you think about the work that's already gone into a lot of these back-end platforms, even though they're legacy, some of that API work's probably been done in a lot of them because you've had to do something. So putting something like, a front-end tool in front of that and migrating the data to lakes and things like that. Those aren't terribly time consuming things nowadays. There's tools for that to extract the data. I'm not talking about like ETL tools, but modern tools to stream data out of them. So getting data out of legacy and into a lake has become a lot easier. Getting a front end on it, there's tools for that like Surify, that allow you to start leveraging that data fairly immediately with pre-built solutions. And so what used to be about building a portal and defining the requirements and integrating and all that time's been compressed. So, even if you put in a modern platform today for policy admin going forward, that's going to be your target platform for migration over time, if that's up in 6 months, great, you can write new business on that. You're still going to probably want a friendlier customer front end, but that same customer front end can be used for all those legacy platforms, even if it's just 1 or 2 or 3 or 4 at a time, right? So you can start to get some of that value immediately, reduce call times, better service, better opportunities to cross-sell. There's a lot of things that can happen right away that give you that really quick time to value, I think.
Well, I agree. And again, I'd say it's really a requirement. Now, parse Ben's words a little bit. He did say some value. So I'm not saying all value, but I agree with Chad. You got to show some value pretty quick in today's world, and rightly so. If you 6 months, 9 months, 12 months, 15 months in, and you're still working on the bowels of what's behind the scenes, you're on the wrong track, and you might as well just give it up. So, as Chad has mentioned earlier, and a couple of us spoken about, the technologies are really different what we have available today. But those differences in technologies drive very different expectations. And I think in the data space, it can be really challenging because really solid, really intelligent, knowledgeable data people love analyzing and they love cleaning and they love pristine data models, and they have been very successful in the past. And now these new technologies are driving different approaches and different expectations. And I do think sometimes traditional data people can, kind of be stuck with that change. But in order to go back to the topic we have today, we want to talk about enlivening or re-enlivening a frozen block. If we believe that requires more consumer understanding, then we've got to use the right data and analytics and tools very quickly to come to a deeper understanding and to take advantage of that.
That's right. And to use your weeks, not months, starting point there, Chad. I do think that it's important to, well, IT can't survive as a black box anymore. We never should have been a black box to begin with. We need to take weeks to deliver obvious value and to get that information out in front of the rest of the business, right? And then continue building the foundations of these things, foundational capabilities, new foundational capabilities. They can take months or years to deliver, but we shouldn't take months to deliver something visible, something usable, crawl, walk, run, right? And so we do have to get those things to market internally, at least, really quickly.
Seems like it might not just be about technology as well. I mean, a pure tech play sounds really cool to somebody with the title of CTO, or John's got like 5 titles, so he probably thinks it's fun. I know Chad and you, we all like that stuff, but I mean, isn't it also true that this enlivening process probably has to dovetail with some kind of commitment to outreach or investment in the distribution or in the marketing angle, if we're going to go back and try to take advantage of the information and the relationships that are encoded in those closed blocks?
And I'm going to suggest you go first, given your multiple distribution models and multiple carriers currently.
I would say yes. Once we start building what I was referring to as those foundational capabilities, and we have access to the data, you're right. The data guys want to take the time to get it right and build those data models so that everything is pristine. So part of the hesitation we have to overcome is not engaging with the business folks that know that data, the sales and marketing folks, the folks in operations that really know that data really well. The good news is once you get in those conversations, they get so excited. I have never seen sales marketing folks as excited about data as when you're talking about analytics they can use for insights, right? They suddenly become part of your team, part of your technology team. So I really do think that conversation is important. It is as much of a business conversation, or maybe even more of a business conversation than a technology conversation. We start talking about, well, it's not all that shiny to talk about data governance and data stewardship, but those are the concepts that start bringing you really into something useful. You start talking to the folks that use that data every day and build it into your models, and you have to turn it around really quickly. So as a result, you end up all being part of the same team.
I think, if you look at, to answer your question, I think, Ben, in a word, yes. I think if you're not doing this to, to enhance your distribution strategy, or to enhance your customer retention, or to enhance, to improve some of the metrics you already measure, it's going to be hard to get it approved and funded. At the same time, as Ann mentioned earlier, right, we need some new metrics, we need some new incentives. So there's a lot here to unpack in terms of the how and the why. At Amazon, one of the things that you learn from day one here is everything starts with a customer and works backwards from there, right? In the case of insurers, that's both the agent and the consumer, right? Or in the case of group, it can be an employer. But if you start with what they need from you and work backwards, it's a lot harder to go wrong. And so, do they need to know if they're a profitable customer? Probably not. But if you're going to treat them, with the appropriate level of expense, and what I mean by that is, do you want to have a 24/7 call center for certain types of customers? Do you want to have an agent relationship with certain types of customers? There are things that incur expense on the side of the carrier that you may want to reserve for your profitable customers, and not somebody that you got through 3 acquisitions, 42 years ago, who's got an $8,000 face value policy. And that's not to say, some customers are more valuable than others, but they are. And, we have to be realistic and start treating our customers like customers. But that does mean, we need to think about customer tiering. We need to think about what channel we service them through. We need to think about what level of service we provide them, because we never went through that exercise the way, say, airlines and banks did. If I call my main bank, I get better service because I have a larger account with them than if I, call my other bank and I've got, a few $100s with them, and, it's to do a car loan through a credit union. They don't care about my business anymore. I don't have that car loan anymore. I've literally got a stray account with $200 in it. So, why should they spend extra money servicing me? Maybe I'll be a better customer in the future, but without analytics, how do they know whether I will or not? So it's all kind of a cycle or a circle, virtuous circle, that you have to be able to put together those metrics from the past, which can come from your closed blocks, and see what kinds of customers are going to be better customers, which specific customers are going to be better customers, what kinds of transactions are good signs that somebody is ready to buy something else. What are indicators of lapsation? There's so many things we can learn from the past, and that we can learn from those closed blocks of business if we do the right kinds of analytics. However, as Ann said, that's something that takes time. It takes effort. You have to get it right. So there's a lot of things you can do up front, and there's a lot of things you can do long term, and you put them together, and over time, you're going to become a more and more effective company while trying to get some time to value on that early stuff.
The channel differentiation is really important. I'm glad you brought that out, Chad. One of the most important things that we find, we sell across multiple channels: independent, IMO, financial channels, and tagging the data you're looking at, tagging the analytics, customizing it based on the type of customer you have and what their experience is really key.
Yeah.
I want to be sensitive to time. For those of you who are in the audience, I teased you at the beginning that we expected you to ask questions. Now's your chance. Type them in. If you have questions for this group, we do have a few minutes here to tackle a few of those. I have one, and it is related to distribution, and maybe you've touched on it a little bit. But Anne, you started on this at the very beginning of this conversation, and it's still sticking in my head. Is there an agent broker intermediary angle to this enlivening process that is unique or that we should be thinking about? Is there a way in which we want to draw that group into that process or that program, as it were?
I think we really do. I think we really do. And sometimes you see tension when you're talking about, am I going to focus on the policyholder? Am I going to focus on the advisor? What about the smaller shops in the distribution? What about the larger folks? And all of those groups see information differently. All of them have a different customer experience. I think that by taking a policyholder centric, a customer centric approach, while checking in periodically and making sure that you're not going too far astray from the larger needs of your distributors, I think it'll get you where you need to go. I don't think you can pick one or the other, though. That's one of the things that we have to keep in mind. I don't think we have to choose, do we focus on the advisor versus do we focus on the policyholder? And I will admit, 10, 20 years ago, those are the sorts of conversations that I was hearing. With our customer is the advisor, our customer is the agent, right? And so we have to think about that a little differently now, and we know that.
Yeah, I totally agree. And unfortunately, in some parts of the world, those conversations have gone on even less than 10 years ago. And it just strikes me as bizarre. I mean, if you look at other industries, like, I don't know, Coca-Cola, bottlers are like really important and distributors are really important. But obviously, Coca-Cola understands a lot about consumers. You look at restaurants, right? The great franchisees and big consortiums are really important, but they understand the consumer. So I often think that argument that we've had for years and years is just outdated, and we really have to, provide value to all.
But the aspect you mentioned, Ben, which is, do we have to pay attention to serving the customer needs of the distributor in order to get good service for the policyholder, is right on. You still have to do that, right? You need to be able to get that information even more quickly and even in larger buckets of information to those distributors that are key to maintaining the policyholder relationships where that exists in your market.
It's funny, and I mean, it's 20 years almost to the day. I just happen to remember because it was, just shy of 20 years now, and it was so crystal clear to me then, as somebody who was relatively new to the life space, that the distributors needed to have either we needed to be working directly with the consumers, or the distributors needed to have the technology and the visibility to be able to treat the consumers the way consumers wanted to be treated. So that was the height of the .com bubble, right? And we were experimenting with what were called delegated portals, basically portals that would allow agents to create their own version of our own portal, so that consumers could work with what was branded to the agent, but was really going back into our back-end systems. And let's just say we didn't have enough budget to make that work well. But, I look at it now in how few carriers have done that even today. And it's really remarkable. Either empower the distribution partners to do this, or do it yourself. But the customer doesn't really care why you're not doing that. Only that, they have to know their policy number to log on to the portal, for example. How many life insurance customers have a copy of their policy or a recent statement handy when they go to log on? Chances are they're going to log on to look for their policy number, right? So when you think about how much more consumer friendly we can make this stuff, even with legacy platforms in place, it's pretty remarkable. And I think that agents learned a long, long time ago that their value is not in providing an address update for the customer, right? Their value is when the system tells them that an address update happened, that they reach out and say, hey, I saw you moved. Is any changes in the family? Oh, you had a kid. Oh, have you thought about life insurance? That's That's the kind of stuff that where agents can provide value or distributors can provide value, not in going into an archaic system and making an address change. So, in short, Ben, and way too late, I know. In short, absolutely, the distributor's got to be part of that process. If you're not changing your model, and most carriers aren't changing their model.
One last question, and it's going to be unfair to you because you only get 30 seconds each for your closing argument. How do we avoid this in the future? Are more ice ages just our destiny in this industry, or are there some things we should be doing now to avoid repeating history? I'm curious on your thoughts on that, and then we're going to close out at the top of the hour.
Focus on the consumer and be data driven.
And keep that data visible and keep your systems flexible.
I would say, I hate to sound like a broken record, but start with the customer, whether that's your agent or your consumer customer, and work backwards from there. If you're doing what's right for them, all the other stuff will. I'm not going to say it'll fall into place, but you'll have to do those other things that John and Ann just said in order to make that possible. So, I agree with what they said, but, for that reason.
You really put the squeeze on. You guys just condense everything down just to the heart of the matter. Very grateful for all of your time and your willingness to touch on this kind of touchy, maybe slightly sensitive topic, but one that I think we all feel is really important. There is a natural evolutionary push to do the kinds of work today with the technology and the demands and the expectation of the marketplace that we're all facing, that I think augurs well for the great thaw. I will hope for that. And meanwhile, to our audience, thank you for joining us this morning, this afternoon, or wherever you are all around the globe. We'd love to hear more from you. If you have any follow-up, we'll be available. Reach out to us. All of you, thank you very much. Have a great rest of your week. See you soon, hopefully in person. And thank you all for coming.